So you actually did it. You scrimped, you saved, you hit your $20,000 goal. That is a huge, huge milestone. So seriously, take a second and be proud of that. But, and this is a big but, what you do with that cash in the next few weeks, well, that's going to define your financial future more than anything you've done so far. Right now, you're probably feeling on top of the world. You're thinking, okay, I conquered the mountain, the hard part is done. After all that discipline, all that time, you've earned a little break, haven't you? And see, that feeling of accomplishment, that's exactly what makes this moment so incredibly dangerous. Your brain, right now, is starting to whisper, hey, you deserve something nice. You earned that upgrade. And that little voice, that is the single biggest hurdle standing between you and actual lasting wealth. Look, you are standing at a classic fork in the road. Path number 1, that's the quick dopamine hit. A fancy vacation, a down payment on a new car, and poof, you're pretty much back where you started. Path number 2, we'll call it the boring path. That's the one that turns that $20,000 into hundreds of thousands of dollars. And that choice, it's being made right now. Okay, so here's the game plan. We're going to start by breaking down that psychological trap you're in. Then we'll walk through a dead simple 4-step plan to actually build wealth. And finally, I'm going to show you the incredible, almost unbelievable power of making really, really boring choices. First things first, let's talk about the real enemy here. And spoiler alert, it is not the stock market, it's not the economy, it's your own brain. The battle we're fighting is against that little voice, that primal urge for immediate gratification that's telling you to go spend the money you just worked so dang hard to save. And this quote, man, it just hits the nail on the head. That little whisper telling you, hey, it's time to upgrade your lifestyle. That is the #1 destroyer of wealth, period. Learning to just ignore that voice is probably the most valuable financial skill you can ever develop. So let's get to the plan. And here's the good news. Building wealth isn't nearly as complicated as all the gurus online want you to think. The real path forward is actually incredibly simple. It cuts through all the noise. And it's just 4 steps. And here they are. That's it. That's the whole playbook. We're going to destroy any toxic debt, build a financial safety net, take advantage of what is, without a doubt, the best investment account out there, and then we're just going to put the rest to work. Simple. Okay, let's start with the brutal math of high-interest debt. Why pay it off first? Because you literally cannot out-invest a 22% interest rate. Just think about it. You'd be accepting a guaranteed 22% loss every year just to chase a potential 10% gain in the market. You are actively choosing to lose money every single day you carry that debt. It has to go. All right, once that toxic debt is gone, you build your buffer. And no, this is not dead money sitting on the sidelines. This is sleep at night money. It's peace of mind insurance. It's what stops you from having to panic sell your investments during a downturn, or even worse, go right back into debt the moment your car breaks down. Okay, so your foundation is solid. The debt is gone, you've got your safety net. Now we get to the fun part, the wealth building part. And this strategy is so simple and so effective that honestly, it almost feels like you're cheating. And that right there is the secret that nobody wants to hear. Building wealth isn't supposed to be exciting. It's not about making crazy bets and getting lucky. The people who really get rich are the ones who just follow a boring, consistent, proven plan for decades. So your very first stop on this journey is a Roth IRA. Why? Well, just look at this number, $339,000. That's what a single, one-time contribution today could grow into over 40 years. But here's the best part. Every single penny of that growth is 100% tax-free when you retire. It is the closest thing to a free lunch you will ever find in finance. So what do you actually buy inside that Roth IRA? You don't need to be a stock-picking genius. In fact, you shouldn't even try. You just buy the entire market with a simple, low-cost index fund. Something like VTI, which is the total U.S. stock market, or VOO, which is the 500 biggest companies. You get to own a piece of everything for a ridiculously tiny fee. See, your job isn't to beat the market, your job is to be the market. All right, now that we know what to do, it's just as important to talk about what not to do. Because honestly, people are incredibly good at sabotaging their own financial success. Let's go over the biggest wealth-killing mistakes you have to avoid. The #1 mistake, without a doubt, is trying to time the market. People get scared, they pull their money out, they think they can jump back in when things are safe. The data is crystal clear. It is a losing game.
Just look at this. If you had missed just the 10 best days in the market over a 20-year period, you would have cut your total return almost in half. The secret is time in the market, not timing the market. Okay, the other huge mistake is what they call lifestyle inflation. And it always starts small. You hit that $20,000 goal, you're feeling good, and you think, you know what, I deserve a nicer car. And that little upgrade, it seems so harmless, right? What's a few $100 a month? Well, let's look at the true cost. Because that $380 car payment isn't just the money you're spending. No, the real cost is the money that payment could have been earning for you if you'd invested it instead. Over 30 years, the opportunity cost isn't just a few $1,000s. It's hundreds of thousands. And there it is, the final staggering number, $863,000. That's the real cost of that car. That small monthly payment costs you nearly $1 million in your retirement account. You are literally trading your financial freedom for a slightly nicer way to sit in traffic.
So when you see the numbers laid out like that, the question just kind of answers itself, doesn't it? Is that temporary thrill of a new car, is it really worth sacrificing that kind of future wealth?
Okay, let's bring this all home. If you can manage to avoid those huge mistakes, if you can stick to this simple, boring plan, what's the reward for ignoring all that noise? What does the payoff actually look like?
Here it is. This is the reward for your patience. This is what happens to your first $20,000 if you just invest it in a simple index fund and do nothing. You don't add another penny, you just let it set. After 30 years, it grows into almost $350,000 on its own. That, my friends, is the magic of compound interest.
But now, look what happens. If you take that initial 20 grand and you just add a consistent, totally modest $500 a month, the result is absolutely life-changing. You end up with over $1.5 million. That's the formula. A smart start followed by boring consistency. That's the whole game. And that's really what this all boils down to. The people who build real lasting wealth, they're not smarter than you. They're not luckier. They're just more boring. They follow a simple plan, they ignore all the hype, and they let time do all the heavy lifting for them. Your $20,000 is a starting line, but it's also a test. Can you be boring for the next 3 decades? Because if you can, your future self will thank you more than you can ever imagine.